Hello again and welcome to the RegalX Trading Academy video courses. My name is Daniel Garcia and I'm your instructor on this video course series for this video number 3 of the intermediate course. On this video we will talk about trend analysis. What are their supports? What are resistances? I'm pretty sure you might have heard the terms before, so we will look at how to use these to do trend analysis and what exactly is a support and a resistance. How do they come into being, and why are stop losses? What are stop losses and take profits? What they're there for? Very important, and exactly these levels. And last but not least, we want to talk about what is a trend following approach and what is a counter trend approach. So without further ado, let's get into it. So first of all, what you can see is that markets usually move cyclical. So it means that there are more certain levels that markets usually test a few times before they decide or bring up the conviction or the buying or selling power in the market to actually break through these levels. For example, when the euro came down in 2014, the low was around about to 106 here. And when it tried to recover, it was somehow capped at almost 115 under 115, 140, 90 level. And you can see that this 115 level over the course of a number of years actually was retested one time, 2 times. We had an overshoot here 3 times, 4 times, 5 times, small overshoot until we eventually, years later, we're able to break through. So this is up here is called a resistance. Why? Because it's the market cannot push through it. There is a resistance. There's something in the way. And on the other side, when a market dropped at some point, it was like magically supported. It was like cushioned, stopped, and this is what's called a support. And you can see it also in the same number of years here. It was supported here a few times, like 1 time, 2 time big overshoot, 3 times, 4 times, 5 times, 6 times. So this was a very important level at the 108 here. And what markets usually like to do is that they test certain levels. They get rejected, they retest them, they break through, they overshoot, they come down, and then they push through if we're in a bull market, for example. And the same if we are on the sell market, that it goes down. And at certain levels, you can see the market on its way up. The market stalled around this level here and on its way down as well. And, and when it recovered here, it recovered right onto the same edges. So support and resistance are price levels where the market participants have an opinion about, And then at these levels, it is decided, so to speak, which force is the bigger one, the selling or the buying force in the market. And that's how support and resistance has come into being. It's simply a change of more buyers or more sellers. So very simply stated, something that we can look at. The DAX is a very good example at the moment. For example, the DAX was down here and then it shot up because of the ECB meeting. But however, only probably because we think the day after was a options expiry day. And usually they have to hedge against big market moves. The big players, that's how the big players play the markets. And up here, then when there was maturity the next day, you can see that it came down all the way. And that's really how supports and resistances also work out here, is that it ran into massive resistance here. There was no buying interest whatsoever. And at some point, when there's not enough buyers, because you always need new buyers for a price increase, right? And when there's no buyers anymore, then the number of sellers start to exceed the buyers. The price starts to go down. Some buyers will hit their stop losses. And again, a stop loss on a buyer position means that you are basically selling your buy position. So that's why you are putting even more force on the selling power in the market. When buy positions get stopped out, it's essentially an increase of sells in the market. And then you can see how the price gets rejected and starts to falter, in this case, very heavily. So it's really always a play of which side of the participants, the buying force or the selling force, is exceeding and support and resistant levels, for example. Same here, it came down. A lot of sellers here, and then the sellers took their profits. When you close a sell position, what are you doing? You are essentially buying to offset your sell exposure, and that's why you see these markets, or every time the market came down here. There was a profit taking probably happening, and the price went back up, and that's how the cycles, these market or price action really moves, always pushed by the demand and supply. Very simply stated, and these levels are just like anchor points where markets like to go back and retest them, and obviously the bigger the time frame, that's why we're in the beginning. I showed you the one-day chart because this will give you a lot more idea about the very big levels. Like something that's over the course of years, important. Obviously, when you go small in a 5-minute or 30-minute, things look differently. But even here, you can see, like on the 30-minute a few days ago, or actually no, just like a few days ago, came down all the way here, it recovered, came back up, and then the ECB sold it back off. And look where we are at. The levels that we are here coincide with these earlier levels as well. Plus, we're very close to this very big resistance, to a former resistance that will now support level. So that's why the possibility for the euro to break through here has gotten smaller. Doesn't mean it won't happen, but the odds are a little bit playing in the favor for buying interest to come back in if you combine the technicals with the fundamentals, and that's how you determine where to put your stop losses. You put your stop losses below very big support and resistance levels so you can sustain a test of the level, but then take the upside again with you, and which brings us to the last part of this webinar, which what is trending, what is trend following and counter trend. So very simply stated, pound dollar is a very good example. What we can see is that when we look at it on a weekly basis, let me just remove the Ichimoku cloud here. All right. So what we have here is that you can see that the pound dollar since December 16th, and this is on a daily time frame. So very big, very, very relevant, always continue to go up and bounced off this line here. Only recently it broke through it, but it took like from December 16th up to March 18th. It was a very intact big trend. So trend following would be that when that you try to catch the market in its cycle. You just get in the position and you try to float with the cycles as much as possible. You can do that obviously on a smaller, tighter sections of this whole move, but you try to go with what you think is the trend. Usually what you try to do is try to buy low. So meaning if you are within a trend and the price gets lower, you try to enter on these occasions in order to catch the next wave up. And counter trend would be we are on the bigger time frame. We are on a buying trend here because the market continues to go up, forms higher highs, higher lows, and continues to go higher. Now, what we see here is that at some point you can even also look at levels like this here, where you can say, all right, look, it has bounced off this kind of line back into retesting the lower end of the trend. So you would try to enter on the higher end of the channel in order to catch the way back down against the overlying trend. That would be counter trend. And there's loads of different, let's just say millions of detailed other strategies based on something like these two very different concepts. However, they can interact with each other as well. Obviously, everything's interconnected here, but generally trend following is to try to go with an overlying direction, and counter trend is to go against the overlying direction. And you can play that as small as you want. You can even do it on a 1-minute chart, 5-minute chart. Obviously, then it gets a lot more complicated for supports and resistances to be meaningful, because the smaller the time frame, the lesser the relevance in a bigger picture is. And that's basically our video for today. Of course, number 3, a little bit longer than usual, but the information I think is very important to really